All right, we're ready to get started on part two. This is tax or church tax and finances part two. And we're going to start out with employee independent contractor. And it would seem like that would be a fairly easy concept as to whether he's an employee or an independent contractor. But there's basically two sides pulling at each other. IRS would like to treat almost everybody as an employee and not an independent contractor. And the reason they would like that is the compliance rate on an independent or on an employee is much higher as far as paying taxes and getting the returns filed than it is an independent contractor. So from IRS's standpoint, they want to treat almost everybody that you're paying an employee. From the employer's standpoint, however, the only thing I have to do for an independent contractor is give him a 1099 at the end of the year as to how much money I paid him, and I don't have to have any withholding or anything like that or do any payroll reports and things like that. So from the employer's standpoint, I would almost rather treat everybody as an independent contractor. I don't have to fool with the taxes or anything like that. So that's where the conflict starts with. So they've come up with how to determine whether a person is an employee or an independent contractor, and they have basically behavioral control, and basically is how much you control that person's behavior. Or you're setting the hours, or you're setting the time that they have to be there. Are you, in control of their time and having them clock in, clock out, or whatever? Do you provide the tools and equipment for them, or do they provide their own? Obviously, if you're providing the supplies and tools and stuff, that would lean more to an employee than an independent contractor. And then financial control, if there's a significant investment by the person working, in other words, again, coming back to, are they providing their own equipment, or are you providing it for them? If they have unreimbursed expenses where you don't pay them for expenses, then that would indicate an independent contractor. And if they have a potential to make money or lose money. As an independent contractor, you have that. As an employee, you're going to get paid, period. So that would indicate an independent contractor. Relationships, if you provide any kind of benefits, pension, paid leave, that could indicate that they're an employee. And you can have a written contract that may help clarify status, but just because you and the person sign off that he's going to be an independent contractor, that does not necessarily make him an independent contractor. Basically, you've got to look at what they actually do and what the performance is. I've got a blue sheet in here that has the differences between an employee and an independent contractor. And like I say, there's not a single test that would sit there and say he is or isn't an employee or an independent contractor. But if you go through and the majority of these are yeses, then they're probably an employee and not an independent contractor. Now, if you classify somebody as an independent contractor and IRS would come in and challenge that and say that they're actually an employee and they would win, there's some penalties for that happening. And basically what the penalties are is, had you had an employee and withheld Social Security, withheld federal taxes, and paid in your half of Social Security, they're going to compute that as if that is the penalty. In other words, what you did not have to pay in taxes, they're going to charge you in taxes, plus what you would have held from the employee, they're going to count as that penalty also. So it's a pretty severe penalty, kind of doubles up the Social Security and puts that federal withholding in there. And the other part is the employee, or at that time, employee, does not get credit for that. So it's just a penalty that they're going to assess for misclassification as a independent contractor. Probably the easiest thing to look for that if you have somebody that's independent contractor is, do they work for somebody else in that same capacity? Example I like to use is janitorial. If you have a janitorial service and they clean other businesses or even residential, then they're probably an independent contractor. If you have a janitor that works for the school system as an employee, but then also works for your church, he's probably an employee because he's not holding himself out as in that business. So you just kind of have to look and see, what is more reasonable for what they do. So, and again, if you err and get it wrong, there are some severe penalties. So let's say first that you make the determination that it's an employee. What do I do if I have an employee? I've got to get a W-4 form. And I've got to have a KW-4 form also for Kansas. It used to be that you just had one form, W-4, but now Kansas has its own W-4 form, or K-4 form. And the reason for that, a lot of it's the tax law changes that they've had, is that the standard deduction on the federal is significantly different than Kansas, and so you almost need two separate forms as to what you're claiming as withholding allowances and stuff. But anyway, that's what you're going to start with on that, and an I-9 form, which basically the I-9 form is just proving that they have a right to work in the United States, either that they're a citizen or have a green card or whatever. And the types of identification you need are listed on the back, and how many kinds of identification you need are listed on the back, whether it's list A, B, or C on that. But you'll need to have that. Now, most churches, I don't believe, are subject to the state unemployment taxes, so you don't really have to have that, but an employee would a lot of times be considered that. You can elect in and cover your employees as unemployment taxes, but I don't think you're required to as a church. So if you had an employee and they were terminated, they couldn't claim unemployment on you because you don't pay unemployment in. So if you wanted to have that protection, you would have to elect to end on that. Now, if you determine that they're an independent contractor, really the only thing that you need to do is at the end of the year, file a Form 1099, which basically shows your name, address, ID number, the independent contractor's name, address, and Social Security number, and the dollar amounts that you paid him. I think I've got, on the blue sheet in here, I've got an example of that, and basically it's a pretty simple form. Like I said, the only dollar amount you put in there is box 7 if it's non-employee compensation. You also need to fill out this form if you're paying somebody rent, and that would go in box 1. So, but that's all there is on the independent contractor. Now, I suggest that if you have someone that you're going to treat as an independent contractor, is that you get their Social Security number, their address, and everything when you give them the first check. People are more apt to give you that information when they're waiting on their check than they are at the end of the year when they're waiting for you to tell them how much money they made. Okay, I don't know why there's a difference there, but there seems to be a difference there. So anyway, that's basically what I would do on that, is get the Social Security number, put it on the 10, and that's, again, it's over $600, but if you anticipate them going over $600, or if there's a possibility, get the Social Security number up front so that you have that.
You said over 600?
Well, 600 or over, yeah. Then as an employee, we're talking about the forms you have to file. We got the W-2 or the W-4, the K-4. Then quarterly, if you file quarterly, it's going to be a 941. I think they also have a Form 942 now that you can file annually. That depending on how much your taxes are, that whether you pay that annually or quarterly. And I may be wrong on my forms. I don't remember my forms like I used to. But anyway, the 941 form, and on this form you can see I've got box 2, wages, tips, and other compensation of $20,000. And that's because on this form, I'm filling this form out for my pastor, who is dual status. He's self-employed for Social Security, but he's an employee for withholding purposes. So I put his salary in there along with whoever else is working for the church. And in my example, I've got $20,000, which I'm saying $15,000 of it's the ordained pastor. So that would go on box 2 as wages paid to him. Now, it's just the wages, not the housing allowance. So if you're paying him a housing allowance, you don't include that in box 2, just the amount that's not housing allowance. Okay? Then if you look on box 5A, taxable Social Security wages, I only have $5,000. So I'm saying $15,000 is his, but again, he's not subject to Social Security withholding as a pastor, as a self-employed pastor, so I don't include it for Social Security withholding or withholding his Social Security from his check. Okay? It's a kind of a light purple form. So on this, I had $500 withheld, which I'm just saying I withheld on the one person. I can withhold on the pastor if I want to. And matter of fact, the pastor at our church wants withholding on his check, so we take withholding out of his check. But everything we withhold, even though part of it's going to be used to pay his Social Security or self-employment tax, it's all treated as if it's federal withholding, and it just goes in one spot as federal withholding. So if you are withholding on the pastor, make sure that you don't include what you're withholding into him any place other than the federal withholding box. Okay? So
944.
944?
Annual,
All right.
if they tell you to.
Yes, yeah, it's not like you have an option. They tell you what the form to use. And basically those are fairly small employers that would pay that. But on the 941, you fill it out quarterly. You'll see that on the Social Security wages, it's the taxable Social Security wages times 12.4% and the Medicare 0.029%. That is both halves, the amount that you withhold from the employee and the amount that the employer matches. You do 6.2% Social Security and 1.45 Medicare, or 7.65 total that you're withholding on their paycheck each time. So that comes to $765. I add that to the $500 I had withholding. I've got $1,265. Assuming that I paid it in on deposits for the quarter, I put that in the total deposits I paid and show no balance due and send this in to the IRS. And that's what you need to do each quarter on the 941 status. Then at the end of the year, you're going to issue W-2s. And you're going to issue a W-2 to the pastor and to other employees there. And when you do the pastor, it's on this pink sheet here. You can see the only thing, it's very similar to the self-employed person because I'm only going to put in one number, and that's the wages, tips, and other compensation. And in my example, we're saying him $60,000. Other than I think my example, I may have $600,000. Yeah, I do. He's a well-paid pastor. Okay, but I intended to put 60. All right, so
60 at the bottom.
what's that?
It's 60 for state. You have.
Okay, I got the 60,000 for state, just a little high on the federal there. So the only thing to fill out is that box 1 and box 16 for the state wages. Nothing else is filled out unless he elects to have federal withholding taken out. And like I said, if it is federal withholding he's elected to take out, you're going to fill in box 2. Even if he says, well, I'm using part of that for Social Security, you're still not going to put anything in for Social Security tax or Medicare taxes. It'll all be federal tax withheld. When he files his tax return, it shows the self-employment tax on that, and he can subtract that federal withholding from that to get to his correct tax balance due or refund. So that's very simple. Now, we talked about housing allowance. That doesn't need to be reported on the W-2 form. You can, in box 14, if you want to, you can enter the housing allowance here or just give him a separate sheet of paper as telling him what his housing allowance is. You don't really even have to do that, but if you don't, he'll go to the tax preparer and he won't have it, and he'll have to come back and get it from you as to what he got paid for housing allowance that year. Guarantee it. So you can put it on there or you can give it to him separate, whichever's easier for you. I think state convention basically gives it a separate sheet of paper, right? And some people like that because they sit there and say, I don't want to give IRS any more information than I absolutely have to. So that would be a reason to do it separately. Again, when he files his tax return, that's not included as income for income tax other than if he didn't spend it on housing, but that's his responsibility. It's not the church's responsibility. Okay? The second W-2 that I have in here is for my other employee, which I'm paid $20,000, which is my $5,000 a quarter. I withheld income tax of $1,000, and you can see the Social Security. And again, this is the half that I withheld, $1,240, and the $290 on the Medicare. And that's the amount that I withheld on the employee, not necessarily the total amount that's paid in for Social Security or Medicare, because I do match that as an employer. That makes sense to everybody?
And if you pay retirement funds to like Guidestone, you should.
Mark the retirement box too, yes. Yeah, there's other boxes that you can have on there, like the retirement. If you have dependent care benefits or other things, and there's various codes for 12A, B, C, and D that may have to be filled out if you have other benefits that you're providing. The next sheet I have in there is a copy of the W-9, and you can use this sheet to get the Social Security number and addresses for your independent contractors. And that way you just have that on file. So if you have somebody that's independent contractor, have them fill out this, get that information, and then you have that for your records. Okay, any questions on independent contractor or employees? Okay.
If the church has a parsonage that we're paying, and the pastor lives in that parsonage, that's not really a housing allowance, is it?
Well, it's a parsonage allowance, so it would be included as his, you would include that as a fair rental value of that.
Okay.
So when you give him the statement at the end of the year, you would say the fair rental value of the parsonage we provided for you is this, because he'll need that to compute his self-employment tax. Okay, it's not taxable to income tax, but it is self-employment tax. And now when you're doing that, what we always tell people is to do a low reasonable. In other words, get it as low as you can, but make it reasonable, because he's going to pay tax on that, self-employment tax on that. But you don't want to have low ridiculous that obviously he can't rent that for $1 a month or something like that. Okay, so you want to be reasonable, but you want to try to get it as low as possible to save him some Social Security taxes. Okay? Other questions? All right, if not, we're going to talk about the not-for-profit annual report. And this needs to be filed annually. And we're in the filing time for that now. Basically, it's due by May 15th of this year for a nonprofit, I believe. And all this is listing the number assigned by Secretary of State, the church name, address, tax closing date, state of incorporation, then the list of title trustees for the church that you can put on there or need to put on there for that. The importance of the nonprofit status is that's what maintains your corporate status. That means that you are a corporation compared to just, in effect, a group of people, like a partnership, okay? And the big benefit of that is if your corporate status and, say, someone falls and gets hurt on your property and they decide to sue the church, if I'm a corporation, they're suing for the assets of the corporation, okay? And that's really the only thing that they can have rewards against would be the corporation. If I don't have corporate status, then everybody member of the church is jointly and severally liable. So as protection to your membership, you want to maintain your corporate status and make sure you have this filed every year. So, and you can look up online, you can go to the Secretary of State, you can do a business entity search, and you can see that you're up to date on that, and you can also file online. As a matter of fact, filing online is really easy because a lot of the stuff that you had in the previous filing is pre-filled in. So you just have to, make any changes to that when you have that. But again, you can go to secretaryofstate.org, and they'll, you can look up your church name, or if you've got your business ID number, you can look it up that way and fill out your not-for-profit annual report.
For the year 12/31 year end for everyone, or like based on your church year end? Like ours is 5/31. Is that
It'd be the church year end. Yeah. So it's due the 15th day of the, I've got the 6th month, it's the 5th month, isn't it? May 15th? Yeah. It'd be the 15th day of the 5th month. I've got 6th month on there. That's not correct. And the fee's $40. It used to be a little cheaper to file it online because they wouldn't encourage you to file it online. Now it's just the same price whether you file it by paper or online. But I just think the convenience of filing it online is much easier. All right, next we have wage and hour. And this is you can get any kind of opinion you want as to whether the church is covered by wage and hour. But basically what you're saying is if the church is covered by wage and hour, then you're responsible for overtime and other wage and hour laws. And it really comes down to, it says, does the church engage in interstate commerce? Do they purchase goods out of state? I mean, to me, it almost looks like I would be covered by wage and hour, but we've checked with attorneys, and it's really kind of up in the air whether that is or isn't. I haven't seen any challenges really one way or the other, but it could be, and then if it is, then you could be subject to overtime rules. And that's where the churches probably get the most chance for having a problem with wage and hour is overtime rules. Because what the overtime rules say is that if I work first I have to define my work week, okay? So if I define my work week as Sunday through Saturday, then I've defined my work week. If somebody works over 40 hours within that defined period, I owe them time and a half wages for the amount I paid them over and above that, if they're hourly employees, I should say, not, salary like the pastor or something like that. So I would owe them overtime. A lot of churches will sit there and do comp time, say, well, we had something really special going on, so they worked over 40 this week, but next week we're going to let them take 10 hours off, and it just offsets. Well, you can't do that. It's by work week. So if there's an offset, it has to be within that work week. So if it's within that work week, that means, yeah, I could work them 12 hours today and less tomorrow, and my total for the week comes up to 40 hours. But I can't offset between work weeks, okay? And that's difficult. And a lot of churches, the person that you're paying may volunteer in the church in other areas. You sit there and say, well, what if they volunteered for the work that they're doing? Well, you can't volunteer for the work you're being paid for. In other words, if I'm the church receptionist and I'm going to work over and above that, I can't say, well, the amount I work over the 8 hours is contributions, or I'm volunteering that service. They just don't allow you to do that, okay? So they can volunteer in the nursery. They don't have to compensate them for that, but it's got to be something different than what you're paying them for. Does that make sense? Okay. Yeah. Subject to minimum wage and overtime. I don't think you probably have too much trouble with the minimum wage that I've seen on churches I've been involved with, but most churches seem to have problem with the overtime. And it's just, because you may have a busy time that just requires more, or they just stay extra and work more. But again, you will probably, if you ignore that, you will probably never get in trouble for it. The only time that you would potentially is if the employee got disgruntled and turned you in. And that's really when wage and hour comes in, is an employee gets disgruntled and gets turned in. And if wage and hour would come in and challenge that, whatever the employee said is correct unless you have records to show different. Okay? It's the way it works. So you want to maintain, if you're doing it correctly and you're, getting timesheets and stuff, you want to make sure that those turned in and they substantiate what you're actually paying them. All right, property taxes. You're exempt from property taxes if the building is used for religious purposes and held for such use. And then the next thing, just because the church owns the property doesn't make it tax exempt. It's got to be used for the religious purposes of that. And it doesn't necessarily, I shouldn't say it has to be used at that moment for that, but you got to at least have a plan that's I'm going to use it for that. And so you can apply for exemption, on that property if the church owns something that they're going to build on, but they haven't really done that yet. Now, the county that you're in may or may not be easy to deal with on getting that exemption. And if you can't get it, you can always file an appeal to the tax status with the Board of Tax Appeals, but don't assume that it's an automatic slam dunk that I'm going to get an exemption on that. It may be something that you have to work for to get that property tax exemption. Okay? Sales tax. Again, church is not subject to sales tax, but in order to not be subject to sales tax, it's got to be paid for by the church. So if I'm buying something for the church, I can't get out of the sales tax. I have to pay the sales tax, and then when I turn it back into the church, I can try to get reimbursed then, but had you had the church pay for it, you wouldn't have to pay the sales tax. Now, an example I always like to use on this is that anything you say is not absolutely true, because my wife, when she went to Wonderful Weekend for Women, she got the hotel rooms, put it on her credit card, and told the people at the motel that she's not subject to sales tax because this is for the church. Well, she's wrong, but she's very persuasive. So she didn't pay the sales tax. But if that motel would happen to have been audited, a sales tax audit, then they would have been liable for that and subject to that. So you just want to be aware of what that is. And you can go online and you can fill out a sheet on there and print out exemption certificates that you can hand out to Walmart's, Home Depots, or wherever you're buying a lot of your supplies with. And then they have that on file so that when you go in to buy something, that it's exempt from the sales tax. But again, it's got to still be paid for by the church church check or credit card, because they got to identify that it is for that church. Okay? Then the other thing that you're going to apply for on there is a exemption certificate for something other than just buying supplies. An example that we've had is that we had some ditch work done and some culverts put in for drainage at our church. Well, we go in and apply for the church or the project exemption certificate. Then we can give that exemption certificate to the contractor. Then when he buys materials for the church to do that project, they can exempt those from sales tax and not have to pay sales tax on those. So, and we've done it even for air conditioner replacements and things like that. I thought air conditioner replacements would just be under the regular exemption, but they're saying that they have to have the exemption certificate.
And
So,
it also takes the tax off labor too.
yes,
Right, on the commercial
yes,
side.
yes.
Right?
Mm-hmm. So
They
that's,
can charge.
yeah, so that's one thing that you really want to look at as you have things that come up. It's to fill out that exemption certificate. Basically, you go in and tell them what the project's going to be, what you anticipate the start date to be, and what the finish date will be, and then they'll send you a sheet, maybe a day, or an email a day or two later or something saying that you qualify. Then you can go back in and print it off, and you can give it to your contractor. So you want to make sure that you think about that as you have church projects, whether it's a roof, whether it's window replacements or things like that, sometimes you wouldn't necessarily think of as a large project. As long as it's a project, you can save some sales tax by filling out that form, and it's fairly easy to fill out.
And I think that the contractor, then they're supposed to fill out a completion form when they're done and give that to you, so you have it on file, a project completion certificate.
They probably,
See, there's,
they're
go up to the revenue department, revenue.
I don't think you do anything other than put it in your file.
Unless you just want to have it that you met that deadline, it's,
Yeah, I don't know how much of them really do that. I think once they've gotten done with the project, they're probably done with the project. But yeah, they can give that to you.
sometimes people won't pay, like, you're like, until you send me the completion form, we'll pay you once you send us that.
Yes.
Do whatever.
Okay, everybody understand on the sales tax? And that can be significant over a year. I mean, you sit there and think, you know what? I know Wichita, I think is 7.5%, and you.
0.15 here in Topeka.
I'm glad I wouldn't move in Wichita. But I mean, you sit there and say 9.15. Okay, so I mean, you're talking close to 10% of everything you buy. So I mean, that's significant money over a year's time. So that's why I say if you can encourage people to not buy it and get reimbursed, but have the church buy it, and you can do that. You know, one of the easy ways to do that is to have a credit card that you could hand out that they've got to turn back in and pay for it that way. You want to be careful with credit cards. You don't want to just have everybody have a credit card. But you can have a church credit card that you can, if somebody's going to go get something for the church, that you allow them to have that credit card, pick it up, and then they turn that back in with that. But yeah, you want to make sure that you maintain control of the credit cards, or you could lose everything you saved on sales tax. Okay?
Some of the businesses here in town, if you give them a list of who's available to charge at that business, they'll go ahead and give you your tax exemption. I mean, you give them their certificate, but then they've got a list of people who can come in and charge, and whenever they're doing a project for you, they go in and charge and
Without a church check or credit card?
Oh, like Lifeway, I mean, they'll just bill us, like,
yeah,
that's one
well,
I was
Lowe's
thinking
is the same way
of.
too.
Maybe Hobby Lobby might be one.
Oh, that they will bill you, or that you pay for it with your personal credit card? 'Cause I don't think.
They'll bill us,
Okay, yeah.
but all that takes is the trustee or deacon's signature and
Yes. Yeah, I think ours, we do that with Dillon's and Walmart and those that they just bill you for these people that can come in. But again, it's still paid by a church check when we get that bill later. Okay. Unrelated business income. Basically, what the reason that you have unrelated business income in the tax law is they don't want nonprofits to have an unfair advantage over people that are in the same type of business. And so an unrelated business income is if the church is generating income from an activity that's regularly carried on and not related to the church's exempt purpose. And raising money for something is not related to your purpose. The actual activity has to be related to the purpose, not what the use of the money from that purpose is. So examples would be if you are operating a bookstore out of your church, then that could, and you regularly carry it on, and that would be considered unrelated business income. And if it's over $1,000, you're supposed to file a Form 990T and file a tax return and pay tax if there's any tax due on that. So most examples are like a bookstore, or if you would have a coffee shop out of your church or something like that, you know, you would have to do that. And with that, you know, if you're going to come under unrelated business income, you're probably going to come under the sales tax rules as far as collecting sales tax on anything you sell too. They're kind of related in that way they're handled. So if you have that, then that's what it is. Then they have attached to this same thing is what they call debt-financed rental income. Okay, rental income by nature is passive and is exempt and would not be considered unrelated business income. But if it's on debt-financed property, then it gets a whole new life and it's considered unrelated business income. Now, recently they've come out with saying that if the rental arrangement is substantially related to the charity's exempt purpose, then it wouldn't qualify. And I always like when they put in terms, if it's substantially related, just means you can do whatever you think's right and we'll argue about it later. There's no definitive something there. So what is substantially related? If I have a church that has a gymnasium and I allow some groups to come in and use that gymnasium for a rental fee, can I say that's substantially related to the activities of the church? I mean, I could probably argue both sides of that, but if the church isn't involved in it and it's strictly a rental arrangement, it probably is not. But again, that is in there if it's substantially related. Now, if you have a church and you're renting your church to a daycare facility, and that daycare facility is also providing religious information, Sunday school type literature for their daycare participants, I could see that being unrelated or substantially related to my church activity rather than just using my gym. But anyway, that is in there, and whether that would hold or not, I've never seen any church challenge that they have that, but it could happen. Okay. Now, next we're going to talk about Internal Revenue Service's authority to audit a church. Basically, there's a little more constraints on IRS that they can't come in and just pick a randomly pick a church to audit to see if they're complying with things. They've got to have a written statement that the organization may not qualify for an exemption and have some evidence outside before they can do that, or may not be paying tax on unrelated business income. So if they knew that you had a restaurant that you were running next door that was owned by the church and they don't have a tax revenue from that, they would have evidence that you're not paying on unrelated income, and that's when they can come in. But they can't just assume that. They've got to have some evidence prior to coming in as to whether you have that. So they do have some limitations as to whether they can do. Now, that doesn't apply to payroll tax audits, criminal investigations, or investigations of tax liabilities of persons connected to the church. They can examine church records if those things exist. And so, we talked earlier about employment contractor. That would come under that exemption, and they would have the authority to look as to whether you're treating people as employees or as independent contractors that should be employees. So they have some restrictions, but it's not, I can do anything I want, IRS can't come look at me type thing, okay? So, any questions on that? Okay, I'll be okay. Theirs is a little more exciting than our group. All right. When I was in practice, we got calls all the time that churches that said that they wanted to have a certified audit by an accounting firm. And generally what I tell them is you probably don't need one, and you probably wouldn't get any benefit out of having one, because most people don't understand what a certified audit is. A certified audit is we're examining your financial statements to see if they're in accordance with generally accepted accounting principles. And I would have to say that 99% of all churches I've seen, their financial records are not in accordance with generally accepted accounting principles. They pretty much, their accounting records is they keep track of their cash in the bank, and then they have receipts and expenditures, including things that you would normally capitalize if you were in a business, furniture acquisitions and things like that. So they're not going to have the books and records that would prepare a financial statement that would be acceptable with general accepted accounting principles. So if you did that and you hired somebody to do that, they would come in, if they examined it, they would just give you an adverse opinion saying that your financial statements aren't in presentation with fairly presented that. So that's not what you need. But what you can do is what we call have them do certain procedures. In other words, they could evaluate, what your accounting procedures or your administrative procedures in. They could see, okay, and maybe do some tests as to, okay, are you properly substantiating your expenses? Are you doing your payroll reports right? Are you tracking your receipts that's going to give you the best protection for the church? Is your internal control set up that one person's not doing everything A to Z? Because what you're looking for is protecting the church, and how do I protect the church? And the biggest thing to protect the church is to have separation of duties in the church. And I know some churches are really small and it's really hard to do, but you can do it. I mean, even if you only have a few people in your church, if you have somebody else either do the bank reconciliation separate from the person writing the checks, or if the person writing the checks never signs a check, but you have somebody comes in as a check signer that kind of looks at the receipts as they're signing the checks, that gives you some control. But if you have one person that signs the checks, writes the checks, does the bank reconciliation, records the receipts, you have no internal control. You've got to have separation of duties as much as possible. And I know it's a burden, it's not convenient, but it's very important to do. I can, as a matter of fact, I had a person in our church the other day who was saying, he says, well, why can't we just trust everybody? Well, I can probably give you 20, 25 examples to why you can't just trust everybody. And it's not necessarily that person came in with the intention of stealing or embezzling or that, but when the opportunity's there, sometimes it happens. It's sort of like if somebody comes up to your front door and it's locked, they're probably not going to walk in. But if it's unlocked, they may walk in. Now, if it's somebody who's going to steal from you, they're going to come in anyway. If it's somebody that's intending to steal from you, even with internal controls, it can happen. But the more controls you have, it kind of protects you and the person working for you from not only theft, the temptation of theft, or even the accusation of theft when it's not necessarily true. So I would really encourage you to make sure that you look at the internal controls you have and see how much internal control you can do and do it that way. It's just generally what happens is you'll have somebody that basically does everything. For some reason, they become a little short of money for a particular week or something, and so they take some money and they maybe pay it back the next week. But the next time it happens, well, at work that time I take it, and then it's a little harder for me to pay back, and so it builds and it builds. And most of the time when you see embezzlements, it's starts small, but it just gets bigger, bigger, and bigger to where it's so out of control that that person really, even if they wanted to, can't get it corrected. So protect that person, protect the church, and set up the internal controls separate from that. Do you have anything you want to add to that?
No.
Okay. But yeah, we've seen it lots of different times. Generally, when we were called in, it was after the fact and was determined how much had been embezzled. And
At our church, I write the checks, make the, take all the receipts, make everybody's payment. I'm the treasurer, and I'm the only one. But the bank makes all of our deposits. Our contributions that are collected by the deacons and the deacon staff are dumped in a zippered locked bank bag, and somebody responsible takes that bag to the bank every week, and the treasurer is completely out of that process.
okay, and that's good for that one part. But for the disbursements part, you're fairly weak on it.
Yeah.
And if you could get, where you prepared them, somebody else signed them and at least looked at the receipts, that would not only protect you, but it protects the church.
Yeah.
Because one example that we had of an embezzlement was at a church, and the person would write a check to himself, and I don't know how many people are familiar with QuickBooks, but then he would go in after he'd cashed the check and just change the register line on QuickBooks from his name to West Star Energy or Home Depot or things like that. So I'm saying, until somebody actually looked at the bank statements to see that, well, why am I paying the utility companies twice, then that can happen.
If I can just clarify, okay, you're the treasurer and you write the checks, but, okay, so you collect your offering, you don't have a counting team or counting teams. So then my question is,
How do you record the individual receipts?
contributions?
Well, the bank offers this service to Topeka churches.
Okay,
And the bank sends me copies of each check, and whenever there's cash, they write cash,
like anonymous,
anonymous, yeah.
okay.
And I get pictures of all of that once a week.
How do you know
Okay.
if a church member's giving you cash? Are you getting envelopes or anything?
Yeah, we get the envelopes back too, but if it's cash and it comes in a blank envelope, then we just post it to cash.
Anonymous, okay.
What about like designations, like if somebody says, hey, I wanna give, in their regular offering, they give additional
Like
for
to
building
Viola
or
Webb
something.
or something like that, they write that on their check or they write it on their
What
envelope.
bank is this? What bank is it?
Silver Lake Bank,
Oh,
Okay.
Oh, that's where we,
What
my
kind of
church banks.
fee do they charge you?
it's free.
Wow.
Wow. Okay.
And because
Wow,
we were spending an hour or so after church on Sunday, 2 or 3 of us in there counting the money and all that kind of stuff. And the treasurer was involved in that, and that's not good. So the bank said, we have this service, and you just put all your money, I mean, they just literally dump the collection plate in that bag, and the deacons are standing there and they zip it and they lock it and they give it to the assistant treasurer or me to take to the bank, but we don't have the keys.
Yeah.
The bank has the.
The bank has the keys. And so, it comes back to us in a report on Monday or Tuesday
That's very good.
next week.
That is impressive.
Yeah. And again,
I mean, you got a bank there, but,
Right,
Yeah.
they're a nice bank anyway.
but they will also set up transfers from individual people's accounts, no matter where they're banking, to be deposited into the church funds on a regular basis. Like if you're traveling or something and you still want your tithe to go in, you can go to the bank and tell them to take it out of my checking account here over at Core First or something and put it in, and they'll do that, and it's free too.
but the main thing is to sit there and look what procedures you have and are they good procedures and am I following them? I went to a church once that they had the locked bag, but they also had the key to it.
Oh.
And I said, well, what's the point? So, yeah, look at your procedures and like I say, you don't have to have somebody outside look at. You can have an internal group, and basically if you have your policies written down as to what you say you're doing, then that group can just kind of do a test to see if you're following those procedures. And hopefully if you've got somebody that's got some acumen in that area, that they can make recommendations that how we can separate the duties. So that's just one of the things that I'd really encourage everybody to look at. I know it's very easy to say, well, I've had this person for years and we just trust them. I've never ran into a place that they've had embezzlement. They told me that they didn't trust the person to start with. So, that's the main thing to look at. Then the last thing I have in your packet is this green sheet. Basically, pink, green, pink. I have color issues. And this basically is just some information that people have asked as to how long should I keep different things, and this kind of gives you kind of an idea as to some suggestions for keeping different things that you have. So that's just for your benefit. Anybody else have any questions?
I did have a question on the independent contractor versus employee.
Yes.
Our pastor and our youth pastor, we just pay as independent contractors, period.
You just pay them as independent contractors?
And then our church secretary and then the part-time people that come in and do our custodial work, they get W-2s. So
Okay. Well,
it's a payroll company.
what IRS says is that your pastor is a employee for benefits and withholding. Do you have any benefits that you pay your pastor?
We do. At the beginning of the month, we just give him a lump sum check that includes like housing and like all those allowances.
What I'm saying, do you have any a retirement plan?
Yes. I mean, we give him money for his retirement plan. We don't have a retirement plan, but we.
So you just give him a lump sum, and then he pays his own retirement out of that, like
Yes,
a
we have
IRA or
designated
something?
amount, like this is the amount we're giving you towards your retirement. And so like on our, expenses, I have like a, pastor 401k or what, I don't know.
Well, I mean, it couldn't be a 401k because that would have to be an employee.
Okay, but just as a, like we've designated, like this is the amount we're giving you this month. And it's, part of it's housing and part of it's this and part of it's that. I pay him that check at the beginning of the month, plus he gets his independent contractor paycheck.
Okay. I don't think you're doing it correctly.
I don't either.
Okay. And the big thing is the benefits. I can't pay a non-employee retirement benefits. I mean, if I give it to him and he sits there and buys an IRA, that's his retirement benefits, okay? But you're not going to get in trouble with the housing or anything like that if you put that information on a 1099, and some churches still do that. IRS asks you to put it on a W-2 form, filling in that box 1, and that's highly recommended. Now, on the retirement part of that, where you can really have some issues on that, if the church had a retirement plan through Guidestone or whatever that, then they pay that directly into Guidestone. It's not shown as income to him, and he doesn't have to have any taxes on that, Social Security or income tax. Where you paying him now, he's going to pay Social Security on what he's taking and paying into his IRA account, assuming that's what he's using for that. So you're costing him some Social Security tax by not having the church have a retirement plan for your employee. And then when he retires, if it's through Guidestone, which is a Southern Baptist organization, when he pulls money out of that retirement account, he can count part of that as housing allowance and not have to pay taxes on that. So he can kind of get a double exemption, not having to pay tax when it goes into retirement account, and part of it's not taxable when it comes out. So I think there's a huge benefit for him to be treated as an employee, and you treat the benefits. I mean, do you have health insurance, or does he pay his own health insurance?
His own health insurance.
Okay, so
I mean, but we give him in that stipend on the first of the month, he gets that money, and that covers,
but he's
for his health
taxed. He's
insurance.
taxed on all that.
Right. I mean, if he doesn't want to use it for that, I mean, that's the assumption is that that's what's going for, and we keep
Right.
track of what we do for that. But
Yeah.
it's not because we run
Yeah.
a system. I mean, have a.
Yeah, but anytime you pay him like that, you're going to pay. He's going to end up paying more taxes than if you provided the benefits yourself. Now, health insurance, there's lots of things going on there right now that you would have to make sure that, you'd have to basically be a group plan if you have more than one employee, if you're going to provide health insurance. But you can also do a cafeteria plan, and, some of the others may not participate in that and still cover that. But I think he would be tax-wise ahead if you treated him as an employee rather than an independent contractor. And I think that by definition, he is an employee for withholding and benefits, and he's only self-employed for Social Security taxes.
He loses the housing too if you're treating him as independent contractor, because wouldn't you have to report that?
No, you can still do the housing, because basically you're treating him as self-employed for everything instead of just for the housing part of it. So he wouldn't lose the housing allowance, I don't think, doing it that way. But
Would you report that on the 1099?
you just have to give him another sheet of paper on that. But yeah, there's a lot of them that still do the 1099s out there, hopefully fewer and fewer as time goes on. But you don't lose that, but you do lose a lot of the other benefits that you could have by having him as an employee.
If you switch from 1099 to employee, does that say to the IRS, hey, these guys have switched, maybe they haven't been that way all along, and maybe we need to go audit?
Well, I don't necessarily think that you'd really have a problem. I think you'd have more of a problem if you never switched. If they came in and they determined that person was an employee. But I think if you went through and said, okay, this person really should be an employee, and I switched doing that, if IRS came in and saw that you were trying to comply, they're more apt to be lenient than they are that, especially if they paid their taxes on it. So, anything else? Because I think it's almost time for lunch.
Do you see, I mean, they keep saying housing allowance is going away.
Well, yeah, I've heard that before. What I've always heard that it's also the military gets a housing allowance in certain circumstances too, and that it's kind of tied somewhat to them, so we may have some protection back end wise that way. Whether it will or whether it won't, who knows what will ultimately happen, but
At some point, if that happens, then the church has to start thinking about social security taxes and that kind of thing.
yeah, if it goes away, then basically that just becomes another employee. And you basically, as a church, would have to look at, okay, how, what was his benefit before compared to what it is now? And if it's costing him more, we may want to, as a church, sit there and, help him to not lose ground, but to maintain ground.